Hello everyone, my name is Dr. Asma, one of the doctors working in London, and welcome back to my channel. Today I'm talking about benefits of buying a house versus renting a house. I will go through my journey of how I actually end up buying a house and what factors influenced me and when did I finally decided to buy the house. So to begin with, I think the most important thing in these decisions is to know your short-term future plan. If you can see yourself somewhere settled for a few years, I mean like 5 years, it's then plausible that you go ahead and think about buying a house. I bought a house personally after a couple of years, and at that time I knew that I am happy with the place I'm living, my family is settled, I'm happy with the commute, I'm happy with the community around me, and probably this is the place I want to live for the next many years. So and before going into the training, I bought a house. I will make another detailed video about stages of buying a house, but that is beyond the scope of this discussion. But important thing was that I knew that I'm settled here, I'm happy, and I know my job, I know my commute, my family is settled. So now I can stay in this place, and I'm really proud to say that this was the best decision I ever made in my life. So as it is rightly said, and yeah, importantly, I was on Tier 2 Visa. It wasn't impossible, but there were a few restrictions which I will clarify later on. So once you have landed in the UK, it's a new country, you need to know what is your short-term goal, where you want to stay, what you want to do, and what you want an ideal place to be, right? So if you're renting for a short term and you're happy with your commute, it's nearer to your hospital, and you're happy with the amenities around it and the facilities, and you're probably saving some money, because whatever, even if you say that renting monthly, the amount of rental you pay monthly can be comparable to mortgage, but usually mortgage is a higher amount when you start paying the mortgage. So one of the important aspects of this decision is to know your 5-year plan. In addition, when you buy a house, you have to have a deposit, an upfront amount, which of course goes to your principal amount as your deposit, and it is saved in the bank, but there are various other fee and various other amounts that are not accounted for, and that are basically the process of buying and purchasing a house, which basically goes from your own pocket. So it's a big investment, it's a big decision, so be sure that whenever you're ready for it, you give your best. So just highlighting a few things that are important when you're renting is, we sometimes think that all the money which is going to rent is going in drain, but actually you are getting a house, you are getting a safe place to live, and importantly, you're not bound to it, you're not reliable for any upfront cost, any damages, any emergency problems. So whatever is the problem, you can directly call the landlord and this can be fixed. And if you are not settled, you want to move on to a different house, you want to see want to move closer to your work, you can easily do it without a long-term commitment. So that is something that you gain out of renting. But of course, if you have been renting for so many years, these all benefits are very minor and you end up losing a lot of money. So in other words, you are actually paying somebody else's mortgage instead of yours, and instead of building your own equity, you are actually building somebody else's investment and giving them the benefit of your payment. So now moving to buying your own house. So there, as I said, you should be really well aware of the surroundings, well aware of the area, because that is probably the place that you won't just get up one day and decide that I'm not happy with the neighborhood, I'm not happy with the commute, I'm not happy with the way the building is, and I want to change the place, because that's really not going to happen. So it's important that you thoroughly search the area, research the place, place and be sure that you want to live in this city and you're happy with your situation in your job and your commute and with your family, with all the rest of the things which go with this. Right, now I'm moving on to buying a house on a Tier 2 visa. So what is Tier 2 visa? As as a skilled worker, you are granted a type of a visa which gives you permission to stay and live in the UK. And it is one of the best type of visa, because from here, when you enter the country, your time is counted towards applying for the residency and citizenship. But in this process of buying a house, you should be aware that there are a few restrictions which come in play when you are on Tier 2 visa. So it is, as I mentioned, it's not impossible, it's not incredibly difficult to get a house, but there are a few conditions that you need to fulfill. And why that is so is because you are new to the country, you haven't shown them that you are a responsible borrower, and they are not aware of your credit history, which makes the lenders, the banks, a bit reluctant to give you that amount of money. Because example, if you just are here for a couple of years and you just decide to disappear from this country, they need to have that trust, that history that puts you in a better spot. So now I am going to explain a few important steps that you really need to do if you are planning to buy a house. First thing is that you need to get a UK bank account. So once you move into the country, you have got your job sorted, your job contract sorted, get a house, and then the second thing you do is get a bank account. The bank account then gives you a credit card. The credit card is basically the bank is lending you that money and you're spending it, and at the end of that month, the bank expects you to put it back to the bank. So paying every month's credit money in full payment gives that trust, gives that history that you are a responsible borrower. So basically shopping through your credit card and then paying back that amount every month in full payments and clearing out your bill is important factor in improving your credit score. Now moving to direct debit. So you must have some direct debits which are the outgoings, which are the regular outgoings from your monthly income. For example, your rents, your council tax, your mobile bills, your television license, your GMC fee, etc. So you need to put all these as direct debit. So then these companies have reliability that at the end of a year or a month you are paying to these people a regular amount, and you hold yourself responsible for that. So these two factors play a major role, although they are like really simple and really thing that we just do without knowing, but paying attention of how you spend your money is important in determining your probability of getting a better mortgage. So now the third step would be that you would, of course, if you're planning to buy a house, you would be saving some money. Now moving on on building a credit history, it is important that you register yourself to UK voting register, because this is also counted towards your credit score. So three pretty simple straightforward things that you can do easily, and you are doing actually. Just keeping your mind focused and being more careful of what you're doing will give you a better credit history. Now going further up is now you're saving money for your mortgage. So I would say that cut down on your expenses and go as frugal as you can, because that in the long term will build up your money, which is your own deposit. Now I want to tell you how much can you borrow if you are on a Tier 2 visa. So really the general rule of thumb is that you can borrow 4 times your stable income. So if your stable income is it comes through, so it's for the NHS salary slip, it is pretty simple and it's very clear what is your stable income. But now moving further ahead and building on that is, if you're doing some extra shifts and locum, then if you're doing on your own trust, then give those additional pay slips. So keep that amount, register that amount in your pay slip. Right. Now I come to the point that how much can actually we borrow from the bank or while being on Tier 2 visa. So there is no difference for being on a Tier 2 visa or a normal resident or citizen of this country of how much amount you can borrow. But there are different factors which I've already explained, which take into account of how much confidence the bank or lenders are having in you in giving that money. So typically it is between 4 to 5 times your stable income, and it can be combined household income. So if both of you are earning, then it is a combined income. If one of you is earning, of course, that's it. You can always top up this income by doing some extra shifts. And in my case, my trust grade salary at that time was 75, around 75, 76K, and I topped up quite a big chunk of extra money by doing extra shifts. And in my case, it was the last 3 months salary slips were counted towards asking for the bank loan. So they played an important role in actually getting me a better mortgage. So by and large, if you have a rough idea, if you know your salary and you can stretch yourself to a certain extent, then you can have a rough idea of how much you can afford. And that is really important, to know your affordability limit, because then the next step is to search for a house. Like, you can't be searching £1 million house when you can only borrow 350K or 400K from the bank. So it is in all these all process, I think, go hand in hand and in parallel. So you need to know how much you earn, how much can you top up, or you can combine your husband or wife's salary, and then you are at the position of asking for a mortgage. And as a rough idea, it is 4 to 5 times your stable income. So once you have an idea of how much you can borrow, then you need to work on your deposit, because deposit is almost 10 to 15% of the house of the property value. So if for example a house is worth £400,000, you would need to have at least 40 to 60,000 pounds in your hand to apply for the deposit. I will in our case, we have been really lucky, and actually this is one of the very important benefits that we actually use from the government, which was getting a new house. Because once you get a new house, you can pay as less as 5%, although you want to keep your deposit maximum, because it actually it decreases your monthly payments. But it's definitely worth looking into new houses, because they can offer a very less down payment, and they can give you a better package of how the repayments can work. So one thing is now it's pretty clear that you have moved from building your credit history, getting to know how you're spending, getting wiser on your earnings, and then asking and having a rough idea of how much you can afford. Now, looking from that affordability idea, you can look into which houses can be you can purchase. The next thing is go for a mortgage agent, because mortgage agents are very clever. They have years and years of experience of how to get better rates from which banks, because it is not a necessity that you will be given money for your mortgage from the same bank that you hold the bank account for. So for example, I have HSBC bank account, but I was given mortgage by Halifax. So there are different rules for that. There are different policies for the lenders, for the banks, and it is not impossible, and it is actually usually the case that you get a mortgage from the other bank. So you ask for the mortgage agent who is clever and can give you better rates, and compare. You can ask for few, and their services are free of charge, because actually they will be paid once your mortgage is approved. They will be paid 1%. I think it's £1,000 or 1,100, which I was asked, which I was told that this is the mortgage agent fees, which gets adjusted to your loan. So you don't have to give them upfront, but this gets adjusted, but it is given to them. So they do get a share, not directly from you, but indirectly from you. So it is very important that you give yourself time and discuss to people, get better mortgage brokers, speak to bank, and see which deal you find the best deal for yourself. And now we are coming closer to further coming down of the having a mortgage, then the next very important step is to get agreement in principle. So agreement in principle is an official document that is released by bank via your mortgage agent, and it gives the surety to the state agent or the seller that you will be given this much amount by the bank. So it's not a final amount, of course, because when you have finalized a property, the bank will go through all these checks and then finally give you the money. And of course you have to have that deposit, that everything. But agreement in principle is something which is kind of solid, and it gives you a better position if you are bidding for a house. If you're going to buy a house, you can go to the state agent and have your paperwork ready, have some idea of how much deposit you are putting forward. And if you're first time buyer, they always like first time buyers because you're not in a chain. Being in a chain means that you are stuck in a position that you have to sell your house in order to get a new property, and that gives them an additional stress that you have to clear your property before you can actually move into the new one. So usually they prefer the first time buyers or the people who can have ready cash and they can just go ahead with an additional cash, large amount of deposit. So in summary, I think it's one of the most mind-wrecking experience, but it is worth going through it. Think your pros and cons of what you want to decide, but I think in the long term, when you are stable enough to buy a house, a few things which are really simple we do every day can go a long way. Get a good credit history, bank accounts, mortgage agent, decision in principle, and then start finding the property. And in my next video I will show how we finally decided on buying a house and how we viewed different houses, what was the process, and the practical steps that you really need to know before actually committing to a house. And looking forward, stay tuned. Thank you very much. Bye.